the day a single rumor moved the world. It began with a whisper, not a headline, not a press release, just a fragment of information passed quietly between desks, uncertain, unverified, and powerful enough to shake the entire system. This story matters now because modern markets don't wait for truth. They move on expectation, on belief, on what might be true. In a world where information travels faster than confirmation, a single rumor can trigger reactions no authority can stop. To understand how fragile confidence really is, we need to return to the moment when a whisper became a global event. It started during an otherwise calm session. Volatility was low. Liquidity was deep. Nothing on the calendar suggested risk. Then a message appeared, brief, vague, impossible to trace. It hinted at trouble inside a major institution. No details, no evidence, just enough uncertainty to spark curiosity. At first, the market ignored it. Prices barely moved. But inside trading floors, risk officers noticed unusual activity. A few large orders pulled back. Quotes widened slightly. Algorithms detected hesitation in order flow. The system felt the change before humans did. The early reveal came when one fund quietly reduced exposure, not aggressively, just enough to protect itself. That action triggered another, and another. Within minutes, the rumor gained weight, not because it was confirmed, but because behavior began to change. Screens flickered, prices dipped, news desks scrambled for verification. Social feeds amplified speculation. Each retelling sharpened the narrative, adding imagined details where facts were missing. What began as uncertainty hardened into belief. Liquidity thinned as traders stepped aside. Nobody wanted to be last to react if the rumor proved true. And in that hesitation, the market created its own reality. The rumor didn't need to be real. It only needed to be believed. And as belief spread faster than verification, the world discovered just how much power a single whisper could hold. As the rumor spread, the market's behavior began to shift in measurable ways. Funding costs ticked higher. Short-term lending tightened. Instruments tied to confidence rather than cash flow reacted first. It wasn't panic yet, but it was caution, and caution moves markets long before fear does. The reveal deepened when pricing anomalies appeared across related assets. Bonds connected to the institution traded slightly wider. Credit default swaps nudged upward. Currency pairs wobbled without clear cause. None of the moves were dramatic on their own, but together they formed a signal professionals couldn't ignore. The system was responding to doubt. Inside banks and funds, conversations changed tone. Risk managers asked quiet questions. Exposure reports were refreshed more frequently. Limits were reviewed. No one said the word crisis, but everyone behaved as if preparing for one. In finance, behavior is information. The early conflict emerged when a major counterparty paused activity altogether. It didn't announce anything. It simply stopped showing up in the market. Liquidity that had always been there wasn't. That absence spoke louder than any confirmation ever could. Algorithms reacted instantly. Reduced participation triggered defensive positioning. Volatility models recalibrated. Spreads widened further. What humans interpreted as uncertainty, machines interpreted as risk, and they adjusted without hesitation. The rumor was no longer just psychological. It had become mechanical. News outlets rushed to catch up. Experts debated possibilities on air. Some dismissed the story as nonsense. Others warned of hidden dangers. The lack of clarity only intensified reactions. Every denial was seen as suspicious. Every delay felt ominous. Silence became evidence. Retail investors felt the shift last, but fell the hardest. Prices dropped suddenly. Stop losses triggered. Portfolios bled without explanation. Confusion turned into anger. Anger turned into selling. The rumor fed on emotion now, growing stronger with every reaction. Still, no facts emerged. No confirmation. No proof. Yet markets don't wait for proof. They move on probability. And with each passing minute, the probability assigned to the rumor grew. Not because it was true, but because too many people were already acting as if it might be. The whisper had become momentum, and momentum, once formed, is extremely difficult to stop. The momentum accelerated when the rumor reached a tipping point. A respected analyst issued a cautious note, not confirming the story, but acknowledging elevated uncertainty. That single phrase acted like a seal of legitimacy. Markets interpreted it as validation. Prices slid faster. Liquidity retreated further. The conflict intensified as counterparties demanded reassurance. Collateral requirements rose. Short-term funding thinned. Even firms with no direct exposure felt the pullback, caught in a widening web of caution. What began as doubt about one institution now infected the system's trust itself. Inside the rumored institution, activity spiked. Executives held emergency calls. Lawyers reviewed disclosures. Communications teams debated responses. Deny too strongly and it looks defensive. Say too little and the silence becomes proof. Every option carried risk. Then came the move that changed everything. A large holder of the institution's securities sold aggressively. Not because they believed the rumor, but because they couldn't afford to be wrong. That sale hit the tape like a thunderclap. Prices dropped sharply. Algorithms triggered. Stops fired. The market no longer needed imagination. It had evidence of stress. Volatility exploded. Correlated assets fell in unison. Funding markets seized as participants hoarded cash. The rumor had crossed from narrative to action, and action reshapes reality. Fear wasn't spreading, it was executing. News desks scrambled for confirmation. Officials refused comment. The absence of clarity widened the vacuum. In that vacuum, speculation flourished. Every data point was interpreted through the same lens. Something must be wrong. Retail investors flooded platforms with questions. Why is everything falling? What did we miss? Answers were scarce. Explanations conflicted. Panic grew not from facts, but from the realization that no one seemed in control. The market was no longer reacting to the rumor. It was reacting to itself. And once a system begins feeding on its own behavior, stopping it requires something stronger than truth. It requires intervention. The world was about to learn how expensive a whisper can become. The climax came when authorities finally stepped in. A carefully worded statement confirmed that the institution at the center of the rumor was solvent, liquid, and functioning normally. The message was clear, direct, and backed by data. On paper, the crisis should have ended there, but markets hesitated. The damage had already been done. Confidence, once fractured, doesn't heal instantly. Prices didn't snap back. Liquidity returned slowly. Participants tested the reassurance with cautious trades, probing for weakness. The rumor had lost its grip, but the fear it unleashed lingered. The resolution unfolded in layers. Funding markets stabilized first, then spreads narrowed. Gradually, volume returned. Over days, not hours, prices recovered. Analysts dissected the episode and reached a sobering conclusion. The institution had been fine all along. The system had nearly broken itself over nothing more than uncertainty. The lesson echoed across trading floors worldwide. Information doesn't need to be true to be powerful. It only needs to be plausible. In an environment driven by speed, reaction often outruns verification. By the time facts arrive, behavior has already reshaped outcomes. Modern relevance is impossible to ignore. Social media amplifies whispers. Algorithms amplify movement. Trust becomes fragile when systems depend on instant consensus. The next rumor won't need evidence either. It will need momentum. Markets don't crash on lies. They crash on doubt. And once doubt takes hold, even the truth struggles to catch up. Sometimes the smallest shift in perspective becomes the beginning of a new future. The day